The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and we have just successfully completed the 2023 tax year, and we're in the process of consolidating all of our files from all of our branch offices into our corporate headquarters, and so we are still busy, and we will help you to prepare whatever year's tax returns you need, because we do taxes every day. And, of course, I'm joined in studio with Chris Fabian. Hey, Chris.
Hello, Esther.
Hello, Christopher and Tiffany Fabian.
Hey, happy Saturday.
Happy Saturday to you too. So we're busy building our database and getting everything all set. We should have it all set before I would think Monday or Tuesday, right?
That would be yes, bearing the computer gods.
Right. And so what people are getting, from what I can see here, is that people are getting those letters from the Internal Revenue Service that are saying, we'd love to process your return once you verify your identity. And that's very problematic because we really can't help taxpayers with that, can we?
Well, we could help a little bit, but really it's a lot of the onus is on them. You could go, generally they'd like you to go online and do it. And then you have to do like an ID verify me process. But if somebody's stumbling with that, they can come into the office and we can call and we can sort of hold their hand and spoon feed them the information. Because one of the things that they ask you is, what's your AGI from 2022?
And people don't know what that means.
Right, exactly. That's right.
So, but the thing is, without verifying your ID, if you get this letter, they stop processing your return.
Correct. Yep.
So it's very important. And if you're somebody that
and
is,
all subsequent.
if you don't know how to use a computer, or you are insecure, or you can't understand what they're asking for, we certainly can highlight what they're asking, but we can't tell them.
Right.
They hear us.
They only want to hear from the taxpayer.
Yeah, so I'll hold up a sheet of paper sometimes, do things on the down low to try to help the client,
Right.
Yeah.
So, but the other day I was on the phone with a client who's trying to get his 2021 tax return because he had identity theft. We were on the phone for 2 hours. After 2 hours, they hung up on us.
Oh, my God.
And so it's very, very frustrating. But the thing is to encourage you, keep trying.
Yeah, because they won't just hold up that year, but they'll also hold up subsequent years of
Well, it's
returns.
interesting because he got his 22 and 23 refund.
That is interesting.
But 21, no way, Jose. So, I mean, and I say all this because if you're in that pickle, we want to help, but our help is limited because if we answer the question, they won't go any further.
No, they won't. We have to disconnect the call now.
Right.
Yeah.
Anyway, I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. If you've gotten any of those letters, you can let us know how you're feeling about that. And whether you're a client of ours or not, if you need help, we can point to the questions they're asking, but we cannot verbalize them.
Right.
So very happy to help. Important things, though, for you to understand is next year's tax season is born now. And I say that because this whole year, 2024, you're making 2024, and the decisions you make now affect when you do your return in 2025.
That's right. Yeah.
Like, for instance, having too much withholding. Why would too much withholding be a bad thing?
Because just like you talked about with the ID Verify, they're holding your refund hostage. So why even play that game?
That is really true, because they can hold up your refund because you withhold, for instance. And over withholding means that when you fill out your W-4, you really want them to take more than they should, and then you get this big refund at the end of the year. There's like two things wrong with that. Number one, they're not paying you any interest on that money, and number two, you're going into debt because you don't have the money to pay your bills because you just sent it off to the IRS in state of New York. So one of the first things I tell you to do this time of year is change your withholding so you don't get such a large refund.
Yeah, and people, that's a hard concept for them to, but I like my large refunds, and I rely on that large refund, and it's a hard concept, but, I remember telling people, you know what? Give me $1,000 a month, and next year at this time, I'll give you $12,000. And they look at me like I'm on drugs.
Right.
Like, why would I do that? Well, that's what you're doing to the government.
That's exactly right. That's exactly right. And so, guess who doesn't have $1,000 a month to pay their bills? You don't, because
Right.
you sent it off to the IRS, who's using your money for a year without any interest. And then at the end of the year, they say, oh, by the way, prove your identity because we're not sending you your refund back till you do.
Yep.
That's right.
Right?
That's right.
But even if you had a balance due, you still have to, if they did that, you still have to do that to process a return. The other thing is, I was just talking to somebody this morning, and I said to her, are you involved in your company's 401k plan? And she looked at me and she said, I've never really asked because I don't have any money. And I said, and it's a big employer. And I said, I bet you they have an employer match. And so if you could only put in $100 a month, $50 a pay, which would be $1,200, and they did a match, they would probably match at $1,200. So in essence, you're not getting the tax break, and you're losing your employer's match, which is all free money.
Yep.
Right.
It is. Yeah. It's and you don't really miss it. And it's just a nice way to set aside, because let's face it, pensions are hard to come by, and so it's just something you should really
Right, and so
consider.
then she says to me, but I think I'm going to leave my employer. And I said, well, if you leave your employer $1,200 richer, and then you can roll it over to an IRA, why wouldn't you do that? But, it's interesting, the self-talk that we tell ourselves, oh, I don't really want to go to HR, I don't, and so what you're doing is shooting yourself in the foot.
Yeah.
And so I'm hoping that maybe this would stimulate somebody to go down to HR on Monday and sign up for their employer pension plan, 401k, because it saves you money in taxes. There's an employer match, which gets you free money. And it's a good thing, even if you're going to leave your employer, because with you goes your pension plan.
Right. And how many people, though, who say they don't have money to do that will go and spend $100 in the casino because they're hoping they're going to win $1,000, and they end up losing that $100.
Right. Okay, let's go to the phones. And again, 8030930, 8030930, star 930 on a cell phone. And we got Tony. Hey, Tony, how can we help you?
Yeah, I didn't file taxes this year because all my income is just Social Security, and it's $26,000. Am I going to be in trouble?
Do you own a home, Tony?
Yes.
How much are your property taxes approximately?
Big deal. Cheektowaga, almost $5,000.
So you have a refund coming from New York State of $350.
The IT
The IT 229.
Really?
Yep.
It's a big refund,
And
too.
probably the year before. Did you file in 2022?
Yes, I did.
Did you get,
Okay.
What was your income in 2022?
Well, between that and unemployment, probably $50,000. But I did get a tax rebate this year for my taxes.
That's your star rebate.
Yeah, I
But
got that.
over and above that, you're entitled to the IT 229 probably on 23 and 22. So it sounds like you're counting your Social Security for 22 as well. So it looks like you got $700 coming back.
Really?
Yeah.
So if I decide to file that, then I can just do it online?
Well, yeah, you can go to New York State Department of Taxation. NY229 is the form you're going to use.
And I don't know if they'll have 22s available online to file electronically online. Because
And maybe 21 as well.
And
right?
I got to tell you, everybody, I'm sorry to burn your bridge. Everybody who's used TurboTax, I've never seen one TurboTax pick up the 229.
Right. Well, he certainly doesn't know about it. But anyway, you could have a lot of money coming back. So many people that don't have to file want to file because they have money coming back. Because our tax code is not just something that takes from you, but many times gives to you.
So in other words, I was good as far as my income just on Social Security. So
Right.
I don't
In other
want
words,
to get
you didn't have to
letters.
file. You didn't have to file a federal return, Tony, but you want to
Oh.
file a New York State return.
Oh, okay. All
And
right.
also-
I can do that.
Also, with the
ahead.
STAR program, they go by your tax returns. So you may want
Yeah,
to.
this,
So I'm just saying.
the star I'm getting. I got
but
the
there's
star.
the
I
enhanced
got-
STAR.
All right, but you have this. You have this
I
program
filed-
for the state of New York called New York 229. You're entitled to it. Okay.
Yeah,
All
I
right.
filed.
Hey, thanks for calling, Tony.
Yeah, you could give us a buzz at 632-7886 if you need help, Tony.
Right. And I mean, that's the thing. We wanna help you no matter what. You can give us a call 8030930. 8030930, star 930 on a cell phone. Text us at 716-8030930. We're going to take a short break, and we'll be back on the other side with your comments and our tips.
We are family. I got all my sisters with me.
Hey, to us, you are family. I'm Esther Gullius, the tax lady from EG Tax, and tax season may be over from last year, but 2024 is in the making, and we want to help you to make the best tax year possible. And I will tell you, if you were tuned to the news yesterday, they're talking about substantially changing capital gains to make them very expensive. And of course, EG Tax will be on the hunt for everything that they're going to propose, so that you can be in contact with your representatives in Congress to give them your 2 cents. So we will keep you abreast of everything, because the Trump tax cuts expire this year. So they're going to be talking about taxes all year, and that's part of why Ask the Tax Lady is such a good program for you to listen to, because as soon as it happens, we'll let you know.
Yeah, as I was driving here, across from the entrance of the UB is 2 hotels, and I saw all these security system staff members in vans, and they're all the security. And I'm thinking that's probably for the housing of people from the border, right? Don't you think? Who knows? Anyways, what my point is that the government needs lots of money, and so if they increase the capital gains, that helps them to fund what they got to do.
Yeah, I heard that they're projecting 45% on capital gains.
Wow.
So that would be quite a
From 15% to 45%.
Well, actually, it could be 20 maximum, right?
Yeah, right.
Yeah,
right.
but so that was interesting. But we're talking, and the other thing that people have to understand, just because 2023 just ended, doesn't mean that it's in stone. You have 3 years to amend your return, or even longer if you had a liability, and get back and change that outcome if you hear something that affects you. Like, for instance, did you have a kid that was in college last year, and they said, I want to claim the education credit myself. I don't want you guys to claim it. Well, what you find out is that this is not in the best interest of the parents, right?
No,
Right.
Or the kids. It is.
For the kid thinks they made out, right?
Right, correct.
But the parents lose like $2,000 over what the kid would have gotten.
Right. And so for a family, it's definitely better if the parents claim the college, And so,
Absolutely. So if you had a child that was in college and you let them claim the American Opportunity Tax Credit, you need to amend your return.
That's right.
Yeah.
Both for the federal and the state. What were you going to say? Chris?
$3,000 on the federal, and it could be $260 to $700 on the state, depending on
Right.
how much
Lot of money.
tuition. So
And so then you'd have to pay back the money that your kid got, if any, and you would then get all this extra money. And if you did this multiple years, you have multiple years to amend.
right. And what about a single mom who this is their only child?
Had a household.
Could be had a household, earned income credit. I mean, so they're giving up more than $3,000.
That's right. Absolutely. So, but again, you have 3 years to go back and fix what you didn't do. Like our caller, I think it was Tony, he doesn't have to amend because he never filed. So
Right.
he's just going to file that return for the
3
first time to
years.
get his 229. But for those of you that have filed already and let their kid claim the AOTC, you want to go ahead and amend that return
Right.
and correct it.
Yes.
All right. Then the other thing is, how many times have you had people say, I don't want to pay off my mortgage because I get a tax deduction for that?
A lot.
Right?
Yep.
So let's just say that your house payment is $1,200 $1,000 a month, $12,000 for the year, and you're paying 5% of your mortgage, and you're paying $5,000 in interest. If you can't itemize, you get no benefit for that at all.
That's
Right.
right.
So you have just made $12,000 in house payments that you think you're saving money on your taxes, and you're not.
Yeah. Sometimes you might find it'll help the state. Maybe if you have some job expenses. Yeah.
Right.
Yeah.
But again, this is one of the things when under the Trump tax cuts, he increased they increased the standard deduction substantially. Well, if that rolls back, now people will be able to itemize again. And this what I'm just telling you right now may change. But even if you were in the 10% bracket and you were paying $5,000 in mortgage interest, all you're saving is $500 to pay $5,000. That doesn't make any sense.
Nope.
Right. But we're not saying take the money from an IRA, take the money from a pension.
Oh no, we're not saying that.
But I just
We're not saying
know
that.
listeners out there are going, oh, maybe I'll do that. And
Oh no. Why now? Why not? Why, Chris?
Well, because if you owe $75,000 on your house and you take it out of your 401k and you're 50 years old, well, then there's a 10% penalty. That's $7,500. Plus, you're adding that to your income. So now we'll say you'll be in the 22%. So now that's costing you 32% to the federal. Plus, New York State's going to want their share. So now you're at 40%. So you would have to take out about $120,000 to $130,000 to pay off your mortgage, and then you're losing that money for later on in life. I know you're not paying your mortgage, and you could start rebuilding, but you would have it's just a lot of money to pay in taxes.
Absolutely, and really so much of what we tell people is that when you're talking to somebody over the fence and you think, oh, well, I'm just going to pay off my mortgage, and that's a good thing, you got to think about the consequences for that.
Right. And callers call here in studio, 716-803-0930. Not our cell phones.
No, I'm just very popular today. I got my cell phone cranking here. But I'm Esther Gullius, the tax lady, 8030930, 8030930, star 930 in a cell phone. You can text us at 716-8030930. So the other that kind of goes, the mortgage thing that people say, oh, I want to I want to make sure that I still have a deduction, so I'm paying a mortgage payment. The other thing is people think that their gambling losses are deductible, but really gambling for a senior is like really a bad thing to do. Why is that?
Well, it increases the taxability of your Social Security, and the standard deduction for a senior person is very large. And so it's not that you get to wipe away your winnings with your losses. They go in two different places. The winnings go on Schedule 1, and the losses go under the Schedule A. But again, the standard deduction is so high often that burden is not meant, and so you just pay taxes on the winnings.
That's right, and people aren't aware. And the other thing is, which is so horrible, it makes your Social Security potentially 85% taxable. So you have the gambling winnings where you lost the money that you can't take as a deduction, and it made your Social Security 85% taxable. I mean, it's like a bad thing.
Really bad thing. Yeah. And what were you going to say, Chris?
I mean, but don't I get to offset it? I get to write off my losses. Well, not really.
Not really.
I mean, especially if you're just a casual gambler and you hit one jackpot for $1,500. That's, I mean, and you don't have a mortgage. Your taxes are low. You're not going to be able to itemize, so you're not going to be able to. So you're going to pay tax on that $1,500. So
Yep.
you gotta be careful, and
Right.
I tell my clients, don't bet max bet. Do the minimum bet. Well, that's not fun. It's the same thing. You
Well,
just
paying taxes is no fun either, right?
right. Yep.
So, and now, and the other thing was we were talking about things that people do to shoot themselves in the foot. A lot of times, my clients whose income exceeds $150,000 will have rental property that is operating at a loss, and they think they're saving money in taxes, but are they?
No, because you're not allowed to claim your loss when you're that high. It just goes into the cloud, as I call it.
Right. So
Suspended
those losses. So you have this rental property. You bought this rental property in Florida. You think you're really doing good. It's costing you $8,000 a year, and you got an $8,000 loss or even greater. But if your income exceeds, actually between 100 and 150, it starts to phase out. But at 150, they don't allow you to take any of the losses. So here you are spending this money on a rental property, and you can't take the loss until you sell it or
Right.
start to make money. So it's one of those fallacies that people think they're doing good and they actually aren't.
Right, and we can talk more about this after the news.
Yeah, we're going to take a short break for the news. I'm Esther Golias, the tax lady. See you on the other side.
We are family. I got all my sisters with me.
Hey, we are family. I'm Esther Golias, the tax lady. It may be tax season's over for last year, but we're making 2024. We're going to keep you abreast of things that you should be thinking of that would help you on your taxes. But, you know, the taxes are important, but your overall financial picture is what's really important. Sometimes you have to pay taxes. You know, you have to make cost money to make money, right?
Yeah.
And so that's where putting a pencil to everything and figuring out what the bottom line is what's really important. And we try to help you with that, right?
That's right.
Definitely.
Yep.
Yeah.
All right, I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. That little commercial there said that the 1099K, they weren't going to send it out as readily as before, but this year in 2023, it's for transactions of $5,000 or more, and next year it even drops further. So if you're somebody that's doing a
now.
third-party pay, understand that they could send you a 1099K for that.
Yeah, that's right. Yeah. And so you really want to pay attention to it and make sure that you're recording it correctly when you do get the form, because the 1099K, you want to make sure that you know all the ins and outs. And then I also wanted to say, you know, you're talking about people having money and shooting themselves in the foot. There's so many times people even say, I'm like not going to work that second job because it's going to cost me so much in taxes. But then it all boils down to just making sure that you have the right withholdings. And like Chris said, I'll give you 50 if you give me 250 all day long, you know? So
Well, and here's the thing. People don't understand that the bottom bracket is 0. Then it goes to 10%. And once you fill that 10% bracket up, then it goes up another 2%. The whole thing doesn't go up 12%. It goes up 2 more percent, right? And so each layer of income that you march through, that percent, that part of the equation, that's what that new bracket is on. So people don't understand that. It is true that they may be withholding more, but you get that back at the end of the year if they took out too much money as you earn the income. So that's where your refund comes from,
Right.
right?
Yep.
Okay. All right. Now let's go back to the guy that has a rental property, or lady that has a rental property, and they want to sell it. If you sell rental property, this is another tip that you should know. At that point in time, you have to really reduce your cost basis by the depreciation that you've taken. So let's say you paid $100,000 for something 30 years ago that's now worth $300,000. You've depreciated it down to zero. So you're going to end up with a complete gain. There's going to be some adjustments for expensive sale and things of that nature, but for our talking right now, you'd have about a $300,000 gain, which is going to cost you about $100,000 in taxes if you sell the property. But you don't have to sell it, do you?
Nope, you could do a real estate exchange, and that's an option that's always afforded to you.
Right.
And so explain what a real estate exchange is, who qualifies, how does it happen, is it hard to do, and why would you do it?
Right. So it's selling your property, but taking another property that you're going to use as a rental in replacement of it. It doesn't mean I'm selling my rental, Esther buys my rental, and I buy hers. That's not that type of exchange.
No, the money can never touch your hands.
Right. But it's not the same parties involved in all the purchasing.
In
and
other words, Christopher Fabian could have a rental property that he'd like to sell because, for whatever reason. Maybe he wants to go to Florida. So he lists his property in Amherst for sale, and it had a big gain. But he can go to Florida and find another place in Florida that he likes and purchase that as an exchange. Then you get an exchanger, which is and basically
mediator.
they do all of this paperwork behind the scenes. And so Chris can take his sale from his rental in Amherst, put it down in Florida, and the Florida place exchanges it for his place in Amherst, all miraculously done. And so he gets a new basis in Florida and pays zero taxes.
Right.
Pretty
right.
cool.
And,
mean-
and is it, here's the thing, is it worth it to save $100,000?
Well,
I mean, you'd work all year for $100,000, wouldn't you?
You might want to do it because you know that in a few years you're going to be in a lower tax bracket, and
Or look at it this way. Let's say you're a senior and you wanted to go to Florida, and so you're going to live in one of the units, right?
correct.
That's number one. And if you pass away, what happens to the basis?
right. Your beneficiaries get the stepped up basis.
So nobody pays taxes.
Defer, which is one of your favorites. Defer.
And die.
Yeah.
And don't forget the die part, because the die part makes you get a stepped up
Defer,
basis.
right.
Right? So, I mean, there's the thing is, talking to a professional is so important before you make some of these critical moves, which can cost you a fortune. And after you come in, after you've sold it, then you say, oh, I would have liked to do an exchange. It's too late.
No.
Because as Tiffany was saying, once you get the cash, you can't do an exchange.
Can't peel it back.
Yeah, I bought another property. I took the money and did you use an exchanger? No. You got the cash? Yep. Sorry. Too late.
Yep. Right, too late.
Call
And
us.
that's where, call us,
Yep.
right? We're very happy to help.
Call us before.
Okay, let's go. We got a text. right?
Yep, the text says, EG and gang, I owe this year to the federal $16,500. Can I set up a payment plan?
Yes, you can.
Yeah.
I mean, generally you can, unless you're, for some reason, you have a plan that you haven't been following up on, and they won't do a plan. But generally speaking, the IRS and state of New York will allow you to set up a plan. You will be paying penalty and interest on it, failure to pay penalty and interest, but you won't at least have the failure to file penalty.
Yeah, and then also you could fill out a form to set up the payment plan yourself, or you could go to irs.gov. It's much more economical to go to irs.gov. If you go to irs.gov, I think they charge a one-time setup fee of $30 or $40, whereas if you fill out the form to do it, I think it's like a $300 one-time setup charge. And if you do it with an operator, it's like $300 or $400. So they want you to go to irs.gov. And then also, if you owe a balance due and you have for a few years, the IRS is so nifty. They'll just go and put your new balance generally and add it right to your existing one and modify that payment plan. Isn't that true, Chris?
Yes, they
Yeah.
do that, which is nice, but you got to remember that bill it's not going to get lower. It's only
Yeah,
getting...
talk about shooting yourself in the foot.
Yeah.
Especially, and I had a client this year who has a brokerage account with about $500,000, and they owed $8,000 in taxes, and they were just completely blown away by owing this money. And they said, well, how are we going to pay this? And I said, take the money out of your brokerage account. Oh, we don't want to take it out of our brokerage account. We'll set up a payment program. I mean, which you can do. But obviously, from a financial standpoint, it's much better to pay it off.
Much better.
Right,
Much
they're-
better.
Right. I mean, and payment plans are like credit cards. What happens with your balance due on your credit card every month if you don't
It's
pay it off?
bigger and bigger and bigger.
And that's what happens with the IRS. They do charge interest and they do charge penalties for not paying. So that debt, even though you're paying $100 a month, it may only be $60 a month going on that balance due. So
Right.
you got to be careful. You
and,
got to.
and the thing is, if you owe money, or you found out this year that you owed money, and there's no really good reason for it. I know I had one client where at tax time I'm doing her return and her husband's return. He had moderate withholding on his wages. On her wages, I think there was like $100 withheld. And I said, wow, did you realize you only withheld $100? And she said, no. And it caused a frigid atmosphere in the office, let's say that, because he wasn't aware, she wasn't aware, because you get a net paycheck when they're electronically deposited without a pay stub, and she didn't know. And so you want to make sure that you change it, and you see a change in your withholding, so that this doesn't happen again next year.
Right. I mean, I had a client, single mom. This was the first year they couldn't claim their child, and her income went from 25 to almost 50, but she never changed her withholding, and she's like all upset. Why do I owe? Why do I? I've never owed before, and you had
So she didn't get the earned income credit. She wasn't the head of the household, right? All
Yep.
those things. And it can be like a snowball running down the hill. So you have no child at home, so you can't be head of the household. Oh, your income went up. You don't get the earned income credit. Boom, at
Yep.
the end of the hill.
And if you're one of those people right now, we're now end of April, which means we're 4 months into the year.
Right.
If you
Believe
didn't
that.
change it yet, that snowball isn't going away. It's
Right.
starting to
It's-
gain momentum. You gotta put that blocker up and stop it, and hopefully affect it enough where you'd I don't want to say over withhold, but over withhold to make up for the 4 months that already went by. So
Right,
you're not.
absolutely. That's what we're talking about. So we're creating 2024. So whatever happened in 2023 doesn't happen in 2024, and you can make smart decisions for 2024. I'm Esther Gilius, the tax lady, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. I wanted to do one thing before we left the tax part of this thing, is when you work with a credit counselor and the credit counselor gets them to take and forgive your debt, what does that do to your tax return?
You have to declare that money that you had forgiven on your tax return, and so you have to put it on other income on a Schedule 1, and that income is declarable, which affects the federal and the state return.
So a lot of people don't realize that every time you have a debt forgiveness, unless you are insolvent, which means you have more liabilities than you do assets at the time of the debt forgiveness, that money is taxable. So don't think that you're getting such a deal here. So what I would say to people, if it's that bad, if you have that much debt, you may want to think about a bankruptcy, because in a bankruptcy, your credit is ruined either way, but in a bankruptcy, is the debt forgiveness taxable?
No.
No. Right? So
Correct.
just another way of thinking of things.
On
And
the
so
form-
again, that's part of what we do at EG Tax. We want to help you. We're going to take a short break. I'm Esther Gillius, the tax lady, 8030930, 8030930, star 930 on a cell phone, 716-8030930. We'll see you on the other side.
We are family. I got all my sisters with
Hey,
me.
to us, you are family. I'm Esther Gillius, the tax lady, and we're helping to shape your 2024 tax return. Maybe give you some tips that something you might have screwed up in 2023, because remember, you can amend those returns. The bottom line is we want to help you with your overall tax and financial situation. Call us before you do something, because we'll give you our 2 cents. You don't have to listen to what we have to say, but at least you get some free advice, and it may save you a ton of money in taxes or some bad financial move. I'm Esther Gillius, the tax lady, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930, and I know we have a text, right, Deb?
Yes, it says, Esther, I lost my job and took out money from my 401k. So I'm 57 years old. I took out, again, $45K from my 401k. Can I avoid the 10% penalty because I am 57 and I lost my job?
Well, maybe, right, Chris?
Right, a separation of employment from age 55 from a pension plan, from a retirement account, not an IRA, does qualify
Well, as he said, it was a 401k.
Right, which is not an IRA. It's a pension plan. It's a qualified plan. So then you do get to avoid the 10% penalty by using the 5329, because it is separated from employment. If you still had your job and did it, it would be a different story.
Right. So what people aren't aware of is, like, there's the big law that says, oh, you can't do that before 59 and a half. But then there's exceptions to the law. Like, for instance, if you were terminally ill, if you had a big tax liability and you had to pay it through taking money out of your pension plan, your first-time home buyer on an IRA, or separated from service. Those are just some of the exceptions to penalty. So he's still going to have to pay income tax.
Right, right.
Correct.
Federal and state, and he won't get the $20,000 exclusion on New York State either.
Right. But you have to be careful with these exceptions, because some are just for IRAs, some are for just qualified plans, some are for both.
Right.
So, again, call us before you do something so we can tell you what.
And it's as simple as a little tiny box on the 1099-R, and the IRS really picks up on those little check marks in those boxes, you know?
Yep.
Right, so that's the important thing. And, again, you can call us at our corporate headquarters, 632-7886. Our website is egtax.com. We're in business to save you money, period. And your tax return is really important to us, not because you're paying us a fee, because many times we're just giving out information, and it's absolutely free.
Right. And, another thing with saving money on your taxes, how about a senior? What way can a senior save money on their taxes? By doing a QCD with their minimum distribution.
That's correct. If on an IRA.
Right. Because that takes your IRA. If it was $10,000, you put $3,000 to your church to say that brings the taxable IRA down to $7,000, which could also reduce your taxable Social Security. So, you could save. Could save you possibly $600 to $1,000,
right,
in taxes.
So let's reiterate: if you have to do a required minimum distribution, and you're taking money out of your IRA, you can take money and do basically a charitable rollover from your IRA to the charity up to $100,000, making that distribution tax free up to that amount of money.
Yes.
Right. Okay, we got a caller here.
We do.
We got
Marjorie.
Marjorie. Hey, Marge,
Hi.
how can we help you?
Well, on April 8th, we took advantage of your free luck. We took our taxes we had them done by a different preparer.
Huh?
And we took them to EG Tax, and I had a gut feeling that the state one might not be correct. So, come to find out, she said, yes, this is not correct. The reason was because we hadn't gotten the deduction for the long-term care insurance, the 20% deduction on the state.
Mm-hmm.
So she said she was sure. She called the manager over. He checked it. They're sure. So she gave us the amount that we owe. We sent the money in right away the next day. So that would have been April 9th, and did the one where you get the proof back that you mailed it. We
Right,
found
return
out,
receipt. Mm-hmm.
Yep. We did find out that they did cash the check. But we received some paperwork from the New York State Department of Taxation and Finance dated April 16th. So we had that electronically sent in on the 8th by EG.
Okay,
So
so
what-
what
what-
happened is they processed the first return first and are sending you a bill, and it's going to take time for them to get that amended return, which will then supersede the original return.
Okay, so they charged us $150 some and said that if you do not pay the amount due
Okay.
by 5/7, we're going to
Okay.
get more.
But that's going to be the Trump thing is going to be the amended return. But what I'd suggest you do, you are our client, just come on in, and what we'll do is we will call New York State and point out the fact that an amended return was done and you don't owe as much money, and they'll take care of it for you.
Okay. Okay, so I was concerned about that 5/7 date.
No, don't worry about it, because they're only charging you interest on money they think you owe. You don't owe the money, so therefore the interest won't accumulate.
Okay.
Okay,
Okay.
So in other words, have a nice Saturday night and don't worry about it.
Okay.
All right.
Thank you.
And so we'll see you during the week.
And the
Thank you.
the nice thing about that credit is it carries forward. So if you don't use it all, you can carry it forward until maybe you do have some New York State liability.
Right.
You know?
I've had
And
people.
who knows if her past returns weren't done correctly and the carry forward isn't right.
Yep.
Right.
Correct.
Right. I mean,
Correct.
I've had people who use that carry forward for selling a rental property.
That's
so
right.
New York State got no money out of selling that investment property where they weren't, they could have gotten
Yeah. Very unusual,
$10,000,
the carry
but because
forward.
Right. So what Marguerite may not have done in the past is that might have been an accumulated deduction that we just took care of the 20% this year because that's all we knew about. But when we go back and look at all those other returns, she might have a larger accumulated credit there. And of course, I have to say this, New York State doesn't really point that out, do they?
oh no, if it's in your favor, they don't.
I mean, they don't point it out. I mean, the federal, I can say, many times will point something out, but New York State doesn't always point it out. Like, for instance, if you're a private pay in a nursing home, right? The 6% that you're paying in bed tax isn't even correct. They should not be charging you. But in order for you to get that money back, you have to do the form to apply for the bed tax back that you paid in error.
Yeah.
Could it be that they're hoping you don't do the?
I'm telling you.
And we get to keep all that money. Yay, New York.
Right. And but one thing I will say is New York is really on top of the with an amended return. I had a client that did an amended return. He was supposed to owe like $200 to the state on the original return. Then we did an amended return and he didn't owe anything. They had already netted it. Not like our Marguerite here that just talked to us, because hers was towards the end of the tax season, but this was like March. They had already fixed it, so they didn't take the money out and then give them the refund. So they're on top of that.
Right. But I have seen where somebody sent in a return saying they owed $3,000. They mailed in the $3,000, but 2 weeks later, they get a bill from New York State saying, you owe us $3,000. And they're
true.
like, but we already paid it.
Yeah, it can really ruin your life when you're getting those love letters. Speaking of love letters, if you are somebody that's getting a letter from the federal or the state, or you're somebody that has to prove their identity, we cannot intercede on your behalf, but we can help you along in the process. So if you need help in that way, you can call us at our corporate headquarters at 632-7886. The bottom line is you have to deal with that letter. It is not a scam.
Right.
Yeah,
I mean, it feels like a scam, it looks like a scam, but it's not a scam. You have to deal with that in order for them to process your return.
I have a question for maybe you and Chris. So I have a client, his father passed away, and he's getting money back from, I think the what is it called? It's the stimulus. And so he's got one of those identity letters. What do you do when somebody's passed away? And you
Well, then you have to send in, I think it's called a Form 52. You have to send in proof of that
The
you're
executor.
the appointed executor. And I have a client that we've been doing that with, again, she's now submitted it 3 times and from 2021. And like, they said, no, you have to send a 1310 in. I said, when I did the return, I did a 1310. Oh, well, we don't process 1310s. Okay, well, you always do any other times.
I think
but
they
anyway.
should probably come in.
Anyway, I'm Esther Gilius, the tax lady from EG Tax. When you're in a pickle, we're there. You can call EG Tax at 632-7886. You can go to our website at egtax.com. But until next week, for those of you that are getting all these conundrums from the federal government of the state of New York, we're here to help you. Give EG Tax a call. Until next week, I'm Esther Gilius with Tiffany Fabian, Christopher Fabian, and thanks for listening. Thanks for your phone calls.